Welcome into Chit Chat Stocks. Before we get to this episode, let's talk about our friends at Public.com. All right, if you're serious about investing, you need to know about Public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving so you can actually understand what's driving your portfolio's performance. Public is a FINRA-registered, SIPC-insured, US-based company with a customer support team that actually cares. The bottom line? Your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That is public.com/chitchatstocks, paid for by Public Investing. Full disclosure in the podcast description.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome into another episode of the Chit Chat Stocks podcast. My name is Brett Schaefer, and as always, joined by Ryan Henderson. Today we have a recurring guest joining the show. It is Leandro from Best Anchor Stocks, who actually has a new podcast also called Best Anchor Stocks that you can listen to wherever you get your podcast, covering a lot of, I think people that listen to our show will enjoy that as well. Talking to a lot of really good fund managers, a lot of legendary investors, getting some fantastic interviews, and those come out on a semi-regular basis. On the Chit Chat Stocks podcast, Leandro's come on before to talk Constellation Software, talking John Deere, actually. One that maybe people wouldn't think about for something that is, a sexy stock to talk about on a podcast, but one that I think was quite interesting. We've also had him on before to talk ASML. It's been one of our most popular episodes. It's a company that people seem to be fascinated about. And we thought a couple years later, we would do an update on ASML when it has been in a little bit of a downturn and right after its 2024 Investor Day. So, with that introduction, Leandro, we talked ASML a few years ago. What has happened to the company since then?
Okay, thank you guys for having me. It's great to be here again. I think it's actually the fifth or the sixth time I'm here, and it's always great. So we recorded the episode, I think, around July 2022, right? So a lot of things have happened since then. And just to name a few, for example, that year in summer, I think it was when ASML unveiled this medium and long-term financial objectives. Actually, it was in November that year. And that was basically the first time that ASML was giving such long-term guidance, right? They were giving objectives looking to 2030, right? We also had the artificial intelligence boom. I think that's been the buzzword. Artificial intelligence has been the buzzword in financial markets for a while now. And obviously, we'll talk about it later probably, but the news for ASML is maybe that it has not translated as people expected to its financials, this AI boom. Then we also had Intel's downfall, and to a lesser extent, Samsung's downfall, virtually making TSMC the only credible buyer of ASML's most advanced tools on the logic side, right? The company also has memory customers, but on the logic side, TSMC seems to be the only credible buyer right now. Then we also had the CHIPS Act being signed into law. I think that happened actually shortly after we recorded the episode. That happened in August 2022, and the episode was recorded a month earlier. And then we also have had more export controls from the US. So a lot of things have happened, and actually it's interesting because I always say that long-term gains are the output of two things. One is finding a good investment, and two is being able to hold it for a long time. And obviously, the amount of noise a company gets helps with the second thing here. And when I was reviewing my notes for this episode, I realized that ASML has in fact been quite a noisy company, right? I mean, I didn't expect less when you're a monopoly in one of the most important or critical products in the geopolitical landscape.
Yeah, I guess I forgot to even mention or think about the CHIPS Act. Maybe we'll talk about that if we can in a follow up, although that's, there is just kind of the political uncertainty with that. Let's just start out with the one that's on everyone's mind, the AI craze. What has the impact of AI been on the company? Are they, as you mentioned here, they may not be benefiting as much, but are they a beneficiary? And is that why I get, it's a hard question to ask, but is that why the stock is in maybe, what is it, a 25% drawdown, something like that?
Mhm. Well, it's actually a fair question. I think the market probably got spooked by the fact that, among other things, that ASML is not benefiting as much from AI, especially when you're seeing companies such as Nvidia or TSMC benefiting directly. I think that ASML is pretty much going to be a beneficiary of any long-term technological trend. But this doesn't mean that the cycles are going to play out uniformly across the supply chain, right? The semiconductor supply chain. One of the reasons is that NVIDIA, when there's a new technological trend, they basically can scale up pretty fast, right? Because they are basically selling designs, they are not manufacturing. TSMC, to a lesser extent, can also expand faster. First, because they probably don't operate at 100% capacity in any given year, so you can go to a higher capacity. You can also raise prices, which is something that NVIDIA has done and TSMC has also done. So then they benefit quite, let's say, automatically, right? While ASML, on the other hand, maybe there's a lag because customers have to see that first that the trend is durable, and once that trend is durable, then they have to make the decision to invest in capacity, and then they have to build that capacity, right? And those are things that take time. So I think it's normal to see a lag, and not just in ASML, right? I think I saw yesterday a chart where you could see that semi-cap companies are trading at relative lows compared to the semiconductor index, and I think it was the SOX. So that's probably already a testament to what I'm saying here, right? Some companies have benefited massively, other companies have not, and are waiting to see that benefit. And if you join to that fact that the rest of the market, right, is in a downturn or getting out of a downturn, then obviously everything is about AI. And if it were not for AI, maybe TSMC would not be reporting such stellar numbers, or Nvidia for that matter, right? So they are, let's say this way, I don't want to be misinterpreted, but maybe they got bailed out by AI, those companies. Whereas in
Now,
semi-cap, when
I was going to say the downturn would have been worse in 2022
yeah,
and
that's
then
it.
2023.
That's it. So some companies got bailed out, but in other companies, as the lag is there, then they are basically suffering the downturn. And another thing that I would say, it's that AI will eventually require more advanced chips, right? Right now, there's a temporary solution because there's still not you cannot implement the roadmap the technological roadmap so fast. So now what they are doing in the data centers, and ASML explained this during the investor day, is that they are stacking chips together to get more computing power, right? So it's a temporary solution. Instead of getting more advanced chips, which you don't have access to because, for example, high NA is still in early phases of deployment, they are stacking chips together to to get that computing power. The problem is that this is very energy and cost intensive, so probably the solution will be temporary, but over the long term, you should see that stacking being replaced by more advanced chips made with, among others, ASML systems. And something that's probably the direct benefit, right? And something that people don't tend to think about, and I think ASML's former CEO, Peter Wenning, he was very clear about this. They are always, let's say, they write technological trends on the back of Moore's law, because the more you drive down the cost of technology, then the more possibilities you can get in new technological applications, right? When technology is very cheap, advanced technology, then more people are going to invest in it and to drive new applications. And I think AI is another example of this, right? AI is going to benefit ASML directly through several applications, but at the same time, AI is going to facilitate the development of other applications that might end up benefiting ASML, most of which are not even present today, right? But they will be in the future.
Okay, makes sense. The other thing I think a lot of people think about when they hear ASML is kind of some of the geopolitical controversy / concerns that are going on today. One in particular to call out is kind of China versus the US. How has there been anything material that's come out of kind of the China versus US trade relations, and how might that, relationship affect ASML's growth moving forward?
Well, I think geopolitics, when you are a monopoly in in one of the most critical products in the world, especially for defense, it's going to be the eternal debate, right? I mean, if you are, this is actually a trade-off, right? If you are a very important company in the world, then you'll most likely be subject to some sort of geopolitical tension, especially when most of the supply chain is in one side of the world and not the other. So I think there are several ways to look at this. First, on EUV, right? EUV has been exports have not been allowed ever to China. So the only way that I see that geopolitics could impact this side of the business would be if China comes up with something similar to EUV, so that the advanced chips that they have at home, they can make them with their own systems, right? Instead of having to get them from abroad. I think that's a remote possibility. I mean, I think it's the probability of that happening is low, at least over the next decade plus. You see a lot of news claiming that China has achieved a 5 nanometer chip or whatever, but what matters here is not being able to manufacture one chip, right? Is being able to do that at scale. And that is what's actually difficult, right? So it's not that ASML is able to manufacture, or you can manufacture a 2 nanometer chip with ASML's tools. Is that you can manufacture lots of them in a short period, right? So then it makes economic sense to do so. And I mean, I think it's a long-term risk, but the very long-term, right? And the fact that China is able to disrupt ASML's EUV business, especially because when they catch up to EUV, then ASML will probably be in high-end EUV, that would be in high-volume manufacturing, and there will be steps. They will always be steps ahead. Then if we look at the DUV side of the business, right? ASML's China business is mostly DUV. Which is deep ultraviolet. These are less advanced systems than EUV. And then you have two types, which are dry and immersion DUV. Immersion DUV is more advanced than dry DUV. So this is used in more mature chips or in more mature layers that are included in advanced chips, right? I mean, semiconductor chips are not made of just one layer. They are made of many, many layers. And some of those layers are going to be EUV and some are going to be DUV. Can China come with a credible competitor to ASML's DUV? Well, they can, and this can evidently be a headwind. What I think is important to understand is that the geopolitical battle has created sort of a, let's say, geopolitical dependable capacity, which means that the West is unlikely to buy chips from China to a great extent, right? Because you might get disrupted in the future. And China at the same time is probably, if they have a viable competitor to ASML, is unlikely to buy chips from the West, right? Because they know that in any given moment, your business could basically zero, right? If you don't get access to chips. But it's evident that the geopolitical battle is getting more intense, right? We've gotten more export restrictions lately. And I don't see how that's going to really change with Trump. But at the same time, what ASML has always argued is that they don't really care where the production of the chips or the manufacturing of the chips happens, right? They are guiding based on global demand, where regardless if that demand is built in China, Taiwan, or in the US, right? The industry is going to need to manufacture the number of chips that the world demands. So that's basically how they guide. So I think it's obviously a risk, but at the same time, it's a risk that shows how important this industry is in the world.
Yeah, and correct me if I'm wrong, but if, say, China just completely gets cut off from ASML's business, doesn't that give them a much longer runway of demand in Europe, Japan, South Korea, and the United States, where that's going to be replaced because the demand on the consumer end and the commercial end and the cloud computing end isn't really going to change, from NVIDIA and all those customers.
Yeah, I think it's a fair point. I mean, if they get completely shut off without having a credible competitor, then yes, I think it would be a tailwind for ASML, right? Because that capacity will be built elsewhere to satisfy the demand. And in fact, it's currently being put into the ground right now. I mean, there have been, well, maybe we can talk about the CHIPS Act, but governments worldwide are incentivizing companies to build domestic manufacturing, and that's good for ASML, right? Because that is going to lead to inefficiencies, obviously, because the semiconductor supply chain is very global and it's very efficient the way it is. So when you break that, let's say, globality, then you're going to create inefficiencies. But that for ASML means that they're going to sell more systems, even if those systems are running at lower capacity, right? That's what in theory should happen. But with geopolitics, it's always tough to know what will happen.
Yeah, that's definitely true. Anyone that has a crystal ball on what's going to happen with China and the US, well, come talk to me. We have one more before we go to another topic, which is reshoring. We had a couple of good Twitter questions regarding China, and you hit most of them, but I have one follow up that I think a lot of listeners have in their minds. And if they probably seeing this if they're not following the company super closely. So, someone asks, why were China sales so high in recent years? Is it due to companies stocking up ahead of more restrictions? And will China sales fall off a cliff when it stops? And I think a lot of investors are worried about that final part.
Okay. So there was definitely a pull forward, right, with China, because the Chinese customers were probably front running the export restrictions, right, and ordering just to be able to bypass those restrictions. At the same time, there's also been, let's say, a timing aspect to it, right? ASML has had a huge order backlog, and during the early pandemic days, that backlog was being, let's say, satisfied with customers from the West. So now that customers from the West started being a bit more conservative, let's say, with the orders, ASML basically backfilled that drop in demand with Chinese customers, right? So they were basically satisfying orders that they could not give to Chinese customers in the years prior, and they were satisfying them now at a faster pace. I think that revenue. Well, I don't think. I mean, the thing that is that I don't understand that this is top of mind of investors, like for investors, because ASML has already said that sales are in China are basically going to fall from a cliff, right? Um, they had 50%, I think, China revenue 2024, and they expect that, or 2023, I don't remember. Well, 2024, I think, and they expect that to go down to 20% by next year. And again, it goes back to the point that I was making earlier. They don't really care where the demand is coming from. They don't care if the mix is, let's say, 50% China, 50% Taiwan, or 50% the US. They care about the end demand, and they know that China is probably going to fall off a cliff, but at the same time that they know that the US is going to start to come up strong, right? Whereas historically it had not been strong because they are making investments in fabs. So while I think that obviously is something to look at and to have in mind, I don't think it's that important as many people are claiming to be, right? And let's not forget that they are saying that China revenues are going to come down from 50% to 20% of overall revenue, but they are still within the guidance ranges that they've given. And also they have not lowered, they actually maintained 2030 guidance, right? Regardless of the new export restrictions. That just tells you how they guide for the business. It's based on demand, not the location of supply.
This might be a dumb question, but is there any inventory risk for ASML, or are all these machines essentially made after orders are placed?
No, there's no inventory risk right now. I mean, they are operating at full capacity. You can have an inventory risk in the future, right? Because they are expanding capacity and they are getting ready to manufacture more systems in the future. But right now, with the backlog that they have, there's no inventory risk.
Okay. One big theme that a lot of people have been discussing in the semiconductor industry overall has been this reshoring narrative. We're seeing it. A lot of production, a lot of investments are being made in production here in the United States. I guess question is, how will these new factories that are being built impact ASML? And are we seeing any of that yet?
Okay, so more factories, obviously, more fabs will lead to more equipment demand. It's not automatic, right? I mean, it has been deferred several times, especially by customers different to TSMC, right? I think Samsung was looking for customers for its US fab, and as they are not finding customers, then they are not they are delaying their efforts. That's the most obvious way, right? In how it benefits ASML. You need more systems. Then from then, I don't think that, I mean, if TSMC's, let's say, venture into the US works, I don't see why they won't build more capacity in the US in the future. Maybe not now, right? But because they are doing like sort of a pilot, building a fab with the CHIPS Act money. But if it's profitable and the returns make sense, I don't see why you would not want to de-risk your business by building more abroad. And then also ASML also benefits from the OPEX of these fabs, not just the CAPEX, right? Because they have the installed base management segment, which like you conduct software updates, you conduct maintenance. So all the installed base that gets installed today has an ongoing benefit for ASML in the future. So that's the two ways in which ASML can benefit. But right now, you are seeing some of these orders in the backlog, but it's not really driving meaningful revenue for the company yet.
And we'll talk about Intel later. Let me ask this one. There's been a debate on whether, I guess not really a debate, but there's kind of two conflicting headwinds and tailwinds. There's the tailwind of AI, which is in an upturn, but I think a lot of people are forgetting or not seeing that almost everything else in the industry has gone through a major cyclical downturn. How do you look at this, two conflicting kind of trajectories for demand in estimating, for future earnings power for ASML? Is it almost make you optimistic that everything besides AI is doing so poorly because eventually that's going to recover?
Well, it's a good point. First, what I would say is that a lot of people tend and I was one of these people, right? To over obsess with cyclicality, right? And say, oh, look, these companies are cyclical, so they should be worth less. Well, I actually think that if you're cyclical, you should be worth less if you don't comply with two things, right? One is that you can weather a downturn, because obviously you're going to be cheaper because there's a risk that in the next downturn you're going to go bust. And the second one is that the industry is secular, right? Even if it has cycles. And I think the semiconductor industry is a good example of this. So even if the industry is cyclical due to the capex cycles, over the long term, it has proven to be secular, right? So I don't really care about how the different, let's say, cycles are playing out, so long as ASML ends, like, or the next peak is above the peak of the prior cycle. I think that's going to be the case, right? And as you say, I think it's actually maybe good news that the cycles are kind of asynchronous, right? Maybe not so much for ASML, but for AI, because if AI starts, let's say, investments into AI starts falling in the future, right? Then maybe you have the rest of the market helping you. And actually, this is a different company, but that's why that's what's happened in Texas Instruments, for example. Automotive and industrial has been very strong, with the rest of the end markets doing poorly. Now automotive and industrial are not doing as well, and the rest of the markets are recovering. And normally the cycles tended to be more, let's say, synchronous, right? They tended to go in the same direction. But obviously COVID just basically put a lot of volatility into everything, and maybe not comparable to past cycles. But that, what I would say is that cyclicality should not be seen as bad so long as a company can survive it. And also I tend to look for companies that are in control of their destiny. And I'll say in control to an extent, right? I mean, the ASML is not in complete control of its top line, right? It's subject to the cycles. Even if if it has been someone consistent, growingly consistently over the past few years, that was because the backlog was huge, right? So they were basically just satisfying the backlog. I think ASML, once capacity equals demand, is a cyclical company. I mean, you are exposed to the capex of your customers, and that capex is going to be volatile. But in terms of margins, I think ASML is much more in control of its destiny, right? Because they have a monopoly, and they are selling to customers. Well, they have a critical product. They have the monopoly of that critical product, and they are selling to customers that are very, very profitable. So I think they can more or less take their fair share. But that's what I would say about the current cycles. And I have no clue when the cycle will inflect. Either the rest of the industry will inflect upwards, and when AI will inflect downwards. What I would be careful is thinking that AI is going to be secular, unlike other technological shifts, right? Because I think that history has proven that that's probably not the case.
This episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they collect and summarize the best stock pitches and bring them to you in a single place. If you're a regular listener, you know that we use Yellow Brick every single week here on the podcast to discover new investments or just find reports on companies we've already heard of. Try it for yourself. Simply go to joinyellowbrick.com/chitchat and search a company or ticker you are interested in. You are bound to find a great report on just about any company. That's joinyellowbrick.com/chitchat.
Weren't people saying that in 2021 as well, that semiconductors had escaped cyclicality? If maybe I'm misremembering that, but I thought I
No,
saw it.
that's actually, that was the case. And to be fair, it seemed like it, right? Because the supply chain was so constrained that these companies were basically bottlenecks at every step. So it seemed like, oh, hey, look, there's no cyclicality here. But at the end, what happened is that they were basically satisfying an unmet backlog through the pandemic.
touching on your point here, Leandro, I've pulled up operating margins for the last 20 years for ASML, and aside from 2009, every single year ASML has had positive operating margins, and for the last 15 years it's been basically north of 25%. So and there's certainly been periods of higher demand than others. So yeah, touching on your point there, it seems like they've been able to be quite profitable through it.
And I also think that that's a good point. And I also think that when you think about a competitor for ASML, they are probably not in the same scenario as ASML regarding cycles, right? If someone tries to mimic what ASML is doing, then you're probably going to be more exposed to cyclicality because you are a smaller company. I mean, ASML, if you read any of ASML's book, I think there's a book called ASML Architects, which is about the history of ASML. It's basically a miracle that ASML is like a company right now. It almost went bust like 5 times in the early stages, right? And it got saved by Philips and other investors. So I think that cyclicality also makes it tougher for smaller competitors to come into the market.
Makes sense. On even though we just kind of mentioned how it's less cyclical, we or I guess the profit margins are manageable despite the cycles. Let's talk about the recent top line numbers. New orders fell last quarter, and it seems like it's very easy, and I guess this is probably the same with a lot of companies, for investors to extrapolate out any kind of current trends longer than maybe they should. I guess what happened with new orders to begin? Do you think that's a long-term concern at all? And then why are quarterly figures maybe not the biggest deal for ASML?
Mm-hmm. So several things to unpack here. First, I wouldn't say it's like orders falling is a very like big concern, right? I actually remember that 1 or 2 years ago, exactly the same thing happened. Orders were down, or they missed the market's estimates by a mile, and everyone was saying like, "This is very worrying." And then ASML came the next quarter with a record order number. So quarter to quarter orders are going to be lumpy, right? And more so now that lead times are coming down, right? I mean, if I'm a customer and I know that the lead time for an EUV system is 1 year, and before it was 2 years, I know that I don't have to put an order right now, because probably I'll be able to put it if I need the system in 2 years, right? Because I'll be able to put it next year. During the pandemic, as lead times were so long, a lot of customers were putting in orders just to secure that supply whenever it came. And also, we have to understand that ASML, like the average selling price of ASML's products is pretty high, right? I mean, it's lower for DUV, but it's very high for EUV. I think it's around, well, higher than 200 million, and I think the new high-NA EUV is going to be north of 300 million per system, right? So when you get an order or 2 orders deferred, let's say a couple of quarters or to the next quarter, then obviously you're going to feel that in the order numbers, right? I mean, that's logical. And in this case, it's not just that, obviously, it's that customers are actually deferring the orders because they are seeing that the environment maybe is not as good as they expected, or some of them, as Samsung, is pushing out their plans to build the fabs in the US, right? So if Samsung expected to build a fab in 2025, then the order should be already in ASML's books. But if Samsung doesn't expect to do that, then they can defer the order. So I don't think it's worrying long term. And one of the, let's say, data points that you can look at to see that it might be a timing reason, right, is that ASML lowered the 2025 guidance, but they maintained the 2030 guidance. So they basically expect similar demand, just not coming before or in 2025. And then that's also the main reason why I don't think that quarterly numbers are that important, right? The high average selling prices. And also ASML has, let's say, a revenue recognition policy, which is like fast shipments, right? Well, how it works is that they cannot recognize a system as revenue, or in the past they did not do it like this, until that system is validated by the customer on site. So they might have shipped the equipment, but they are not going to recognize it into revenue until the customer has accepted that the system works well, right? Right now, that was how it worked at the beginning. Now they are trying to change that because obviously they've gotten better in doing the systems and customers trust that these systems are going to work. So they are shortening those periods. But what I'm trying to say here is that you can have, let's say, 3 UV systems shipped this quarter, but not recognized into this quarter's revenue, right? And 3 UV system, let's say, if it's INA UV, you could have like almost 1 billion in revenue. That's missing just due to timing reasons. So that's why I don't think that quarterly numbers are all that important for ASML. Or imagine a customer, instead of putting the order in before Q4, like in Q3, he does it the first week of Q4. Well, that's going to impact your numbers, but it's not meaningful for the business.
Right. A concern would be almost a multi-year downturn in orders. It's not one quarter, just given the nature of the bulkiness of one of the orders can impact it. That makes a lot of sense. Let's transition as we go further into the interview about ASML's future. The first question I have is on the technology. And this is something that, you knew exactly what the future of their technological stuff would be. Yeah, we wouldn't have to do this podcast. You could make, give them, you go work for them and make a lot of money that way. But in your humble opinion, can the technological moat continue to widen? And any update on these high NA machines that I think are first going to Intel and how it can impact the business?
Well, I think the technological moat will actually widen more. And the reason is pretty straightforward, right? Like I said before, it's not about being able to manufacture these chips, but about being able to manufacture these chips in a productive manner, right? And at scale. To achieve this, you probably need to have a lot of volume going through your system so you can learn from your manufacturing at scale. So as long as ASML retains most of this volume, it will be very tough to a competitor to catch up, because ASML is going to have more volume to feed it back, let's say, to the systems, so the systems get better, right? Either in yield or in cost savings in water or in energy. So, and also we have to consider that customers, ASML's customers, like TSMC and other customers, they have pretty good margins, right? So they get a high value from ASML's systems. It's unlikely, and they know that they work, it's unlikely that they would give meaningful volume to another competitor unless they can demonstrate that it makes sense to do so, right? So, and that this is also the reason why ASML could, in my opinion, extract more of the value chain, right? They have a monopoly, customers have high margins, they could, let's say, squeeze customers' margins. But at the same time, ASML is not stupid, and they know that if they do that, that's an incentive for customers to try to fund other, let's say, other methods. In fact, when ASML was starting out, ASML came to be thanks to early investments by its customers, right? Like TSMC, I think Intel was there too, and Samsung. So I think the technological moat is going to continue to widen, especially because in the investor day, they talked about this. They talk about the concept of commonality. ASML is increasing the commonality of its systems. So for ASML to go from EUV to high NA EUV and then to hyper NA EUV, it's easier, right? Because a lot of the parts are common across systems. But a competitor has to start from zero. So it's not like I need to copy high NA EUV. I need to copy everything that's come before that until I can get to that. So I think it's a pretty wide technological moat. And then on new products, I think the next decade is going to be about high-NA EUV productivity enhancements, right? So making high-NA EUV more productive. And then maybe in 10 years, we start to see something related to hyper-NA EUV. I was actually surprised that in the last Investor Day, management was quite confident in that they'll solve hyper-NA EUV. The problem with hyper-NA EUV is not the technology as such. I mean, they are quite confident and they will be able to have the technology. The problem comes, how cost effective is this technology, right? Does it make sense to build this technology? Does the returns make sense for us? Does the return make sense for our customers? So that's the main problem. But I was actually surprised to see how confident they were that beyond, let's say, 2030, we might start seeing some talks of hyper and AUV, which would be great, right?
Yeah, there can always be a next step forward. This is one of those businesses where the technology, if it can just get better and better and better and better, well, hey, look, that's increasing your runway for growth. One concern that some of the smart, semiconductor focused analysts have touched upon, and I don't know how not comprehensive is the wrong word, how consistent everyone is in this belief. But there are some people that believe out there that lithography, um, as a percentage of semi-cap spending, might go down, and there's a risk that the EUV systems were kind of the peak around that. What are your thoughts on this in general? Is there any predictability to this? Is it something that ASML has talked about? How do you look at that in relation to the company and whether it's a risk for the business?
Yeah, so I'm going to start by saying that I have no clue whether litho intensity will go up or down in the next 10 years. I mean, it has gone up in the past, especially when ASML released EUV, right? Because EUV got widely adopted in the industry, and obviously it was expensive. So then you had a lot of capex going into EUV. High NA EUV, based on the early trials and what customers are saying, is adding value to customers, right? So I think that's an argument against litho intensity. At the same time, I think an argument for litho intensity is that the increments are getting smaller, right? It's becoming tougher to advance more slow through shrink, right? That's why you're seeing the industry transition to other methods like stacking, right? Like 3D structures. But lithography is still adding value, right? I think you could make a, let's say, a case for, hey, I'm sure it's peak litho intensity if high NA EUV was a flop, right? Because it's like, okay, this is not working. We need to look for other methods. But high NA EUV seems to be working, and it seems to be working even now that it's not like you still have a lot of productivity enhancement to come, right? So I don't know if it's going to like if we are at peak litho intensity, but at the same time, I don't think it's that critical. I mean, ASML, even if the semiconductor industry keeps growing, then capex is going to continue growing, and if ASML gets, let's say, a few percentage points less of that capex, well, it's still going to get meaningful amounts of revenue, right? And at the same time, ASML knows that it's adding value with their new tools. So I don't see how management is not taking into account litho intensity when setting the price, right? I mean, you basically can set not whatever price you want because it has to make sense for customers. But if you expect litho intensity to go down in the future, but you know that your product is adding a lot of value, then most likely you are going to take your fair share of that value, even if you're selling less systems, right? So that's how I would look at it. And how I said before when we were talking about AI, even if it's peak litho intensity, everything that helps the semiconductor industry bring the cost down and continue implementing, let's say, Moore's law, it's a potential benefit for ASML in the future, right? Because I mean, that will lead to future applications, which will still need lithography. So it's important to say that the new methods that are being implemented in semiconductor manufacture complement lithography, but they don't substitute it, right? So that's also important. So ASML is always going to have a key spot in the value chain.
All right, listeners, we've got a new sponsor here on Chit Chat Stocks. The name is Blue Chippers Club. Blue Chippers Club was recently started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside this awesome community, everyone gets to share and break down their portfolios with each other, participate in weekly calls, and compete in fun portfolio performance competitions. I really like this idea, and it's why we're promoting it here on the show. In fact, Brett and I are in the community ourselves and enjoy just how much value we get collaborating with other investors. When I first got into investing, a role model of mine recommended that I build a network of or community of friends to bounce investing ideas off of, and Blue Chippers does just that. If you're interested in joining, head on over to bluechippersclub.com and hit apply. Right now, it is completely free to join. The link will also be in the description.
If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered, SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks. Paid for by Public Investing. Full disclosures in the podcast description.
Okay, I'm looking out at revenue over the last decade, and the growth has been lumpy, but if you look out over the last 10 years and probably even further, ultimately revenue has grown at a nice healthy pace on an annualized basis. It says here since 2011, basically 11.5% annualized rate. Why would that not occur over the next 10 years? Is there anything that could potentially stop that from happening? I guess there's obviously if there's a massive cycle, but I guess anything. What would be top of mind for you?
I mean, I think there are lots of things that can happen. You have geopolitics. I mean, as we just said, litho intensity. All of those are really unknowns, right? But then in the growth favor, you have the semiconductor industry is expected to grow significantly over the next 10 years. You also have ASML actually implementing high-NA EUV now. So then that will be also a growth driver. And ASML will also remain the backbone of lithography for less advanced chips, right, through DUV. So I think that ASML will continue to keep growing. Exactly at what pace, I actually don't know. What I would say is that management has a track record of being conservative, right? I remember that many years ago they shared guidance in an investor day, and they basically got laughed at because they were very optimistic, and at the end it turns out that they were being very pessimistic. So if you look at management's guidance, like how I see it is basically the range is very wide, right? So 2030 calls for revenue, if I'm not mistaken, between 40 and 60 billion. So that range is huge, right? But why is the range so large? Because they basically don't know where the cycle will be, right? It's not the same to arrive at 2030 being the trough of a cycle or being the peak of a cycle. So that's basically the argument behind that. I expect ASML to grow over the next decade, but I think it will be continue to be cyclical, right? I mean, growth is not going to be smooth. Even it has not been smooth in the past, but it has mostly trended upwards, right? I think we can have periods where you have revenue decreasing rather than growing.
Yeah, it's the nature of the cyclical industry. They just had an investor day, and I will mention, then I just checked this as you were talking here. You can find all the materials for that investor day at our friends at finchat.io. The slides, the transcript, the report, everything you could want on one handy tool. And you can check that out at finchat.io/chitchat. Get a 15% discount on any paid plan and check out all those good tools. But let's talk about the investor day. You mentioned a lot of things already in this episode, but were there any big updates from the investor day that investors should take away from here?
I think there weren't many big updates. I actually think it was a very good investor day, just to understand how the business works, right? They maintained 2030 guidance, which I think was what the market was focused on, right? After lowering the midpoint of 2025 guidance. The market probably wanted to see that it was really a timing reason. And the way to see that was basically seeing that the 2030 guidance was intact. So they maintained that. I think they did lower slightly the gross margins because they expect the product mix to be sort of different in 2030. And as I said earlier, what surprised me the most was probably, I've already talked about these things, but one was the confidence shown on Hyper NA UV. I think before this investor day, it was a possibility, but it was not being openly discussed as, hey, this is like the next decade, what we'll have. And also the explanation around commonality. I think that was also very important because also one of the interesting things, and it relates commonality and Hyper NA UV, is that they've built high NA UV already to be able to build Hyper NA UV, right? So that brings the cost down quite a bit and also makes maybe the investment more worthwhile. So that's also important, right? Because they need to invest less dollars. So then the returns can still be good, even if Hyper NA is not a massive jump with respect to high NA UV.
All right. Let's see. Ryan, do you have any other questions? Well, I guess here, let's talk this one. The guidance, 2030 guidance. They're calling for 60 billion in euros in revenue, 60% gross margins. I guess the big top level picture, what prevents this from happening? What sort of pre-mortems are you looking at to say, look, ASML's consistent growth just stops sometime this decade?
I think that the most evident one here is the cycle, right? I mean, what prevents ASML from getting to 60 billion is the cycle. Then you have litho intensity. I mean, it's all topics we've talked about, but those are the obvious ones. And that's, I mean, the future is uncertain, right? And even for a company that is talking every day to its customers and knows the roadmap of its customers, they even give a pretty wide margin on those revenue scenarios. So the futures will always be uncertain, right? So how I go about, and I think this is probably something that a lot of people ask themselves, like, how do you value this? How I go about this is basically I build two scenarios based on the 2030 guidance. I build a worst case scenario, right? And a best case scenario. So in the worst case scenario, I get the low end of the revenue guidance. It's evidently not a worst case, right? Because things can go worse than what management thinks. But really, like in the context of guidance, is the worst case. I get the lower end of revenue guidance, then I get the lower gross margins, the higher OPEX expenses, and then I get to a net income figure. And in the best case scenario, I do exactly the opposite. So even you get a pretty wide range, right, in net income. I think it's between 14 and 24 billion. So then basically based on those two scenarios, I have two scenarios of exit multiples, and I just consider that ASML is attractive when the worst case scenario it's okay, right? I don't need it to be a double digit return in the worst case, but when I expect to not lose money in the worst case scenario and get a pretty good return in the high end scenario, that's how I look at it. Obviously, in the future, you can also have a lot of technological applications that you don't think about today, and that 60 billion number could be higher. I mean, I think it's unlikely, right? Because ASML is capped by supply, so they cannot manufacture like scale super fast. But then maybe you don't get a higher number that's 60 billion, but you get a higher multiple than the one you think you're going to exit at, because there are a lot more opportunities going forward. So that's how I think about it.
It seems difficult to model because of the wide range of possible outcomes. I guess my question to you would be, what would cause you to sell, if ever? Would it be? It seems very unlikely that there's any sort of moat disruption. Just it seems like they have a massive technological advantage. Is it like purely valuation based?
Actually, I I was looking at ASML when it was above 1,000 euros not long ago. I remember looking at the valuation saying, gosh, this looks expensive, right? I mean, maybe I should sell some of my position. I didn't. Then the stock dropped like 45% from those highs, and then I regretted it. But then at the same time, I thought, okay, I'm saying this because it has dropped, but if it were trading at 2,000, I will be like regretting selling, right? I would consider selling ASML if the valuation got crazy, like 100%. Or if I saw that the geopolitical battle was actually like crippling the company, which can also happen, right? I mean, you can get tied in between disputes, not only with China but with other countries, right? Or maybe, I mean, I don't think that the risk for ASML is that someone copies EUV. I don't think that's happening. I think the risk might be, we talked about it, but a new method that disrupts the way that chips are manufactured, right? That calls for lithography being basically not a high value add step in the process. I think that will also be a reason why I would consider selling, but mostly right now it would be valuation.
Makes sense. As we wrap things up here and we end this episode, I want to close out with one question, and that's the management culture, the culture in general at ASML, and the CEO change. What is your assessment of that? How do you like this new CEO? Anything in regarding to that and kind of the qualitative aspects there as we wrap things up?
Yeah, it's actually funny because the CEO transition, it was announced 1 year earlier than when it happened, but a lot of people and even the market was like kind of surprised, because I don't think ASML was all the time reminding, hey, we're going to like have a CEO transition. They basically announced it 1 year before it happened, and then it happened. So I think there's no problem there in terms of culture, or I don't think the CEO change, for example, is worrying, right? Christophe Fouquet comes from EUV, which is where the company is going, right, in the next phase. He was, I don't know what the exact title was, right, but president of EUV before becoming CEO. And he's also relatively young, which I also think it's important, right? If you want to manage the business, I think ASML also tends to allow the CEOs to have a, let's say, relatively long tenure. I think that's really important, actually, much more than people think it is, especially in companies that have to make decisions that are so long-term oriented, right? You cannot have someone making long-term oriented decisions when you're having them in the role for 2 or 3 years. Actually, I think that the average tenure in corporate America, I think it's around 3 years or 4 years, something like that, which evidently is going to lead to short-term decision making. So yeah, I think we have to wait and see what the new CEO does. He honestly has not started in the best environment possible, but either for the company or for the stock. But I guess that's we'll see he endures through this and executes like they did in the past. I don't think the CEO at ASML is a super key position. I actually think the CTO is more important, right? And that was Martin van der Brink, which also left the company. So I think that's more important. But at the same time, he left because he was like working for ASML forever. So no problems there. He basically just went into retirement. But at the same time, I remember watching a documentary, an ASML documentary, where they said it's not like, I mean, it's very tough to copy ASML because it's the systems are modular, right? So they are made of several modules. That makes it easier to manufacture and also like to upgrade and change parts. So they in the documentary, one of the heads of the of like the technology function said it's so difficult to copy ASML because basically nobody knows really why this works, right? So if you're building this module, you know that module works, but when it all comes together, it's sort of like it's not written in paper why that's going to work, right? So that's the beauty of ASML. So I would be more worried about the departure of the CTO than the CEO, to be honest.
All right, that's a great way to close things out. Leandro, if anyone is interested in any more of your work across the podcast, newsletter, anything Best Anchor Stocks, where can they find you?
I'm on Twitter at InvestQuotes, and then you can find my investment research service at bestanchorstocks.com. And as Brett mentioned at the beginning, I also have a podcast. I'm not as a recurring publisher as you guys are. I'm trying my best though. That's called Best Anchor Stocks, and you can find it on Spotify, and I also have it on YouTube, but I do not upload every episode to YouTube.
As an advertising partner for the podcast, we appreciate whatever you get out there. Or you got something out there. I'm just going to tease some of it. You know, Palantir was the latest episode. I guess that one is a popular company. Long short investing with George Levatas from Upslope Capital. We have China Risk to Big Tech and Nintendo with Ryan O'Connor, fascinating investor, and plenty of other ones. And I think if we go back, there's actually a couple with some very famous fund managers, and hopefully you'll get some on there in the future as well. Thank you, Leandro, for joining the show once again. Hope listeners found value out of this. Let's hit the disclosure. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I or any podcast guests may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, once again, and we'll see you next time.